Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The US is deploying new shakedown tactics on its exporters to give some favoured tech companies tariff and national security export relief if they pay. However, first, China's vehicle sales were up almost 15% in July from a year ago, following a nearly 14% rise in June. That means they sold 2.6 million units in July. The sales pace is running far higher in 2025 than the record pace in 2024, but the really large sales months don't come until late in the second half of the year. Sales of new energy vehicles surged 27% year on year to more than 1.25 million units in July, accounting for nearly half of all new car sales and marking the fifth consecutive monthly increase. Hong Kong-listed Chinese property developer China South City Holdings has been suspended after a Hong Kong court ordered its winding up. That ends a years-long process of attempting to survive through reorganisation and emphasises how tough the Chinese property market is still. In India, there are reports their central bank is in the market supporting the falling rupee. So far, they have spent $5 billion on the operation to no obvious impact, although it may have helped slow the devaluation. In the US, the federal government is finding new ways to tax. First it was tariffs, import taxes, and now it's export taxes. It's extracting 15% from chip sales, starting with exports to China. This shakedown of corporate America comes with waiving tariffs or national security export restrictions, giving the company advantages over its rivals. It's very soprano. It is a habit sure to spread, ushering in a period of hyper-crony capitalism, one that may be indistinguishable from capitalism with Chinese characteristics. The Chinese are at least trying to wean themselves off the habit because it led them nowhere. Tomorrow the US will release its CPI data, and after firing its agency head last month because Trump didn't like the result, this will draw special scrutiny, especially as tariff costs are increasingly being passed on. The key reaction will be to watch how the TIPS bonds are priced. Those are the Treasury Inflation Protected Securities. The CPI rate is the basis for these yields, and if they're going to be artificially impaired with, investors may sell down this $2.1 trillion bond market corner. If that happens, we'll all notice. Markets expect the 2.7% CPI rate in June, the one Trump didn't like, to rise to 2.8%. and the core rate to hit 3% for the first time in 5 months, and calling an end to the disinflation cycle and the start of reinflation. Later today, we'll get the RBA's latest rate decision. It almost certainly will announce a rate cut of 25 basis points to 3.60%. And before that, the widely watched NAB Business Sentiment Survey will be released. It isn't expected to show much change from the modestly positive readings. And as important as today's announcements will be, don't forget tomorrow CBA will release its annual 2025 results to June. And they're widely expected to be a record, exceeding 10 billion Australian dollars. It is ranked in the mid-40s on an assets basis worldwide, but it is one of the world's most profitable. The US Treasury 10-year yield is now at 4.26%, down 2 basis points from yesterday at this time. And the price of gold will start today at $3,354 an ounce, down $44 from yesterday. But American oil prices have firmed, and they've firmed by 50 US cents to be just under $64 a barrel, while the international Brent price is now just on $66.50 a barrel. And the Kiwi dollar is now at 59.3 US cents, down 20 basis points from yesterday. Against the Aussie, we're also down 20 basis points at 91.1 Australian cents. Against the euro, we're unchanged at 51.1 euro cents. That all means our trade-weighted index starts today at just on 67.2 and down 10 basis points from yesterday. And the Bitcoin price started today at $119,552 and up 0.8%. Volatility of the past 24 hours has been modest at plus or minus 1.7%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.